We just got Microsoft Q1 earnings after the bell, but more importantly, just moments ago on the conference call, which I was listening to, we got Q2 guidance. And it's really, really bad. We'll talk about that in a moment. We are seeing Microsoft stock sell off another 6.5% in the after hours. It was down just a couple of percentage after the initial Q1 results were out. But after we finally got clarity on this upcoming Q2, the stock is selling off more because from a revenue perspective, we're coming up very light for Microsoft. We'll talk about that. I've got a big fake red candle in this one showing you the dramatic drop that we've got in Microsoft. This will be the most in-depth earnings report that you'll see on YouTube of Microsoft. What is going on, investors? Hopefully you guys are doing well out there. We're live from Las Vegas here, grinding over these earnings report because they are particularly important in these volatile markets. During the regular trade, Microsoft was about 1.3% higher. In the after hours, we are seeing this one drop tremendously, nearly 7% down to $233 per share, giving back a lot of the gains that we've seen over the last couple of weeks. Now, that's on the heels of this Q1 earnings report, which came in at $50.1 billion. That was 10% year-over-year growth on this one. That did beat expectations by $410 million. They beat expectations on that EPS side by earning $2.35 per share. We'll show you the expectations for Microsoft. Revenue expectations for the Q1 quarter was just $49.69 billion. The high-end estimate was for $51.544 billion. We'll talk about how they came in at $50 billion. We'll go through the numbers here in a second. We'll look at the segment results in a minute, but we'll go through the numbers line by line and show you how this quarter worked out from a revenue perspective and an earnings perspective. But the more important thing came in the call. That's why we're waiting for Microsoft to have that call, usually around 3 p.m. Pacific time. The CFO comes on and then gives you her guidance for the company for the upcoming Q2, and it's not that great. For the productivity segment of the business, $16.6 to $16.9 billion. For the cloud business, $21.25 to $21.55. That's where you saw a little bit of weakness there. Personal computing, $14.5 to $14.9. That gives you total revenues over at this one, $52.35 to $53.35 billion. Wall Street expectations were for $56 billion. So you're coming about $3 billion light on that revenue side. For Microsoft, you see the high-end estimate for the upcoming Q2. Again, we're going to talk about Q1 here in a second. That's the quarter they just gave us a full read on. We're talking about Q2 guidance. Wall Street was expecting maybe a number as high as 57.6 and as a low as 53.84. So this guidance is actually coming underneath the low-end Wall Street expectations for that Q2. That is why you saw this stock. It was actually hanging out just $6 lower than where it closed today at about $244 per share. But this is why you wait around to do a video on Microsoft till about 3 p.m. Pacific time, because after that announcement, the stock dropped another $10 lower, roughly down here to about $234 per share. Talk about what this means from a technical perspective. So that Q2 guidance, not good for Microsoft. We'll see how they recover heading into the rest of the year. Now, in terms of those segment results in the Q1, everything looking pretty good, especially if you factor in the constant currency. Obviously, being a global multinational, they are very much impacted by the fact that that dollar strength against virtually all currencies, but particularly the euro, has really impacted the profitability of these companies outside of the United States. And you see the massive constant currency impact, kind of a mid-single digit number across the board, and even higher on products that are particularly popular outside of the United States. You saw a dramatic decline in Windows OEM as PC shipments have fallen off the map, as most people have either upgraded their system more recently or during the pandemic when they got the money to work from home. All important Azure growth coming in at 35% on a non-constant currency basis, at 42% factoring in constant currency. The expectations were closer to 43%. You see that search, news, and advertising business growing at a constant currency rate at 21%. That is respectable, certainly factoring in Google's results, and we'll see more evidence probably from Meta tomorrow as well. Everything else across the board about what you'd expect when it comes to Microsoft. When we come over here and look at the financials, we had that $50.1 billion worth of revenue. That was a shade under $5 billion higher than it was a year ago, about $4.8 billion higher. Your total cost of revenues went from 13.6 up to about 15.5. After you factor in your R&D spend, your sales and marketing, and your general administrative, your operating income went from $20.2 billion up to $21.5 billion. So not a huge jump, but again, $4.8 billion on that top line. You grew this operating income by about $1.2 billion or so. Your net income, however, went down. Your net income went from $20.5 billion down to $17.5 billion, particularly because they had a provision for income taxes, which during the call, I think they basically explained this as being kind of a one-time thing. So that's going to negatively impact your earnings per share. You factor in net income when it comes to EPS. That is why EPS is not a number that I pay attention to very closely here on the channel, because occasionally you get these one-time things like income taxes that'll make your earnings per share look negative compared to last year, despite higher revenue, higher operating profits over at Microsoft. All things being considered, this Q1 from an operating perspective was actually pretty good for Microsoft. It's really this Q2 guidance that was really, really bad, and that is what's sending the stock much lower in the after hours. When we come down here and look at the balance sheet, it paints a pretty glorious picture for this company. They still have well in excess of $100 billion in cash. Now, we have to factor in that Activision Blizzard deal is maybe going to close. Maybe they'll get regulatory approval for that deal. My prediction is sometime after the election, you'll get some kind of approval on that deal. That'll certainly impact this company from a cash perspective. Right now, they have about $107 billion in cash, balanced off by about $45 billion worth of long-term debt. It'll turn upside down just a little bit, particularly if they pay for that Activision deal with almost all cash. I'm not exactly sure how they're going to finance that entire deal. Maybe they issue some more Microsoft stock to raise a little bit of funds that way, or maybe they just pull the entire purchase amount out of this cash balance sheet. They certainly have that, and I don't necessarily think that would be negative from a shareholder perspective. Now, the other thing to think about as a shareholder of Microsoft is if that Activision deal is blocked by the United States government, they'll have to pay just a $3 billion breakup fee, and they'll still have this massive $100 billion cash pile. I think it would maybe negatively impact Microsoft in the shorter term, but longer term might not be that big of a negative. The company would probably find something else to use that cash on. Let's come over here and look at this from a cash flow perspective. You have that net income number of $17.5 billion. We talked about how it was less than a year ago, despite higher operating profits and higher revenues, particularly because you had higher income taxes. You get to add and subtract some things like that, and then year over year net cash provided by your operating activities relatively flat. Last year, you were at 24.5. This year, you were at $23.2 billion. They repaid about $1 billion in debt in the most recent quarter, probably about the minimum as last year. They paid about $4.8 billion. In terms of stock purchases, this is the buyback for Microsoft, about $5.6 billion of share repurchases in the most recent quarter. Last year, they actually accelerated a little bit more, $7.7 billion. My guess is they're slowing down that a little bit, considering they might have a very large amount of money that's leaving this company based on that Activision acquisition. They paid another $4.6 billion in dividends. Last year is 4.2, a little bit higher because they raise the dividend every year at Microsoft, offset a little bit because they're reducing the number of shares outstanding that they have to pay a dividend on. Property, plant, and equipment up $1 billion year over year. Last year, you're at 5.8. This year, actually not quite $1 billion, more like $400 million, up to about $6.3 billion. All things being considered, they added about $9 billion worth of cash to the balance sheet over at Microsoft based on the cash flow from the business over the last 3 months. Looking at this from a technical perspective, still nothing to be overly concerned about. We do have some area of support here. The initial one, I'm going to wiggle this line so you can actually see it. It was at here at about $244 per share. The stock closed today at $250. After these earnings were announced, it dropped down here to $244. We waited for the guidance and we pulled all the way down here to about $234 in the after hours. That's about a 6.8% drop. We have another area of support down here at probably about $230. It's probably roughly where the shares are currently. You do have these lows that you made on this stock really just 2 weeks ago down here about $220 per share. That should be acting as some area of support as well. In general, you have a larger kind of sideways consolidation moment that you made with Microsoft back here between July of 2020 and to about January of 2021. This looks like to me the magnet where Microsoft wants to head to. The price range on this is anywhere between about, we'll call it $200 per share up to about where the stock is trading right now at about $230. So we're really at kind of the top end of this sideways consolidation. As Microsoft pulls back into this green box, I wouldn't blame any investor for wanting to maybe accumulate shares, maybe add to a position, dollar cost average, either up or down into position. I'm going to clean out some of these lines so it makes a little bit more sense from just a downward trend perspective as well. This stock is in this downward trend, like basically every single stock that we're looking at. It's making a very steep series of lower lows, lower highs, really across the board, really since the tail end of last year. Most stocks have started this pattern either in November of last year or January of this year. In general, what I've been doing with stocks is really trying to buy them towards the bottom of this channel. We started doing that after you had this larger rally in July. We figured it would give it back, and it did. And then we're starting to accumulate these high quality stocks, these dividend payers, these share buyback stocks, these stocks that are going to continue to gain market share by their competitors floundering a little bit in this marketplace, but also through acquisitions. I like Microsoft anywhere in this area, again, from we'll call it 200 up to about 230. That's not a wide range, but we're certainly towards the top of that range at the current time. But Microsoft put up a decent quarter, certainly 10% revenue growth. Certainly decent, but it more than likely is going to come down to the single digits in terms of its revenue growth for that Q2. And then what Wall Street is going to start to expect is, well, all of a sudden Q3, which is really fiscal calendar year Q1 for here in the United States, it ends in March of 2023. Microsoft's kind of on a funky fiscal calendar system, but somehow we're going to magically accelerate back to a double-digit grower for Microsoft. It could potentially be, if that Activision deal closes, that will certainly add on a significant and tangible amount of revenue every month for Microsoft, and also generate positive earnings as well, as that company was profitable. It's possible some analysts or some of these analyst estimates include that, but the danger for Microsoft and really most stocks that we're looking at here on the channel is if we're not able to meet these expectations and they continue to be knocked down, well, you're going to constantly be taking kind of 2 steps forward and 1 step back with these stocks. That's not always the worst time to accumulate stocks. Just make sure they're the high quality ones and you are of the belief that they'll come out on the other side eventually, reaccelerating back to this double-digit growth that Microsoft and Wall Street expects heading into next year. We'll certainly keep tabs on it here on the channel. Look forward to seeing you guys again on Friday as we go more in depth on all the earnings that we have the rest of the week. Hopefully you guys enjoyed today's video. Be back again soon with more. Good luck with your investments.